Ladies and gentlemen, welcome to Real Estate Investor MBA. My name is Tejas Gosai, and I've had the honor of helping hundreds of investors achieve the American dream by creating generational wealth through real estate. I've spent the past few years interviewing the most knowledgeable experts I could find in the business to cut your learning time and conquer the hardest subjects in the game. Check out rei.mba, which my team and I have packed with over 75 interviews and free access to our real estate roadmap, webinars, and publications. If you're listening, I am rooting for you, and you're already on your way to financial freedom. Cheers and happy hunting. Today's guest is Jake Harris. Why is it awesome? Why did I ask him to be on the podcast? Because he specializes in investing in real estate during a recession. It's great because this book that he's written called Catching Knives came out earlier this year. I think he's been working on it for the past couple of years, and it is just opportune. Let me give you his bio. So Jake Harris is the founder and managing partner of a private equity real estate firm that has managed, developed, and acquired more than $200 million in assets under management in the last 5 years alone. With nearly 2 decades of experience in real estate, construction, and investment management, Jake is a licensed California broker and recognized expert in opportunity zones, infill development, construction, cost control systems, and the scaling of distressed investing businesses. His book is called Catching Knives, and it's applicable to what is going on in this inflation-driven, world that has wars within it and a lot of confusion. Information is your sword, it's your shield. It's also just a lot of static out there. So you got to be able to look through this. So here's a couple things we're going to talk about today. Buying when there is blood on the streets, right? That means when interest rates get so high that sellers have to reduce the purchase price or asking price for their asset because there's not as many people that can buy the deals. Catching Knives is a practical guide to change your mindset and prepare for investing in distressed opportunities. Regardless of where we are in the cycle, this is a must read. So check that out, all in the show notes, and I'll leave you with this. Watch what you watch on the news. There is just so much information out there. You really need to be cognizant about what you're looking at. I would urge you to check out our website, rei.mba, where we have curated a bunch of information specifically dedicated to investing in real estate. It's called Market Intelligence on the website. With that, you're really going to enjoy this interview. Thank you so much to everyone who makes our show possible. Cheers. Hey guys, we're back. It's Real Estate Investor MBA. We have Jake Harris with us. Jake, thanks for being here.
Hey, thanks for having me.
For sure. First, we'll get out the website, catchknives.com. You can't really forget it. It's very, very aptly named. So Catching Knives is a practical guide to change your mindset and prepare for investing in distressed opportunity. Jake, we need you now.
Yeah. So which is funny is I wrote this book in the beginning of 2020, and I was like, so I've done a lot of distressed investing over the years and, done thousands of transactions, hundreds of millions. And actually, I tell in the book, that I wrote was like how I lost everything. I actually got some advice from Robert Kiyosaki when I was, I say a kid, younger. But, I was in my 20s and, I was flipping all these houses and, I was starting to hold on to some properties and they had some negative cash flow. And, I was living in Phoenix and, for those that don't know, Robert Kiyosaki's studio, Rich Dad Radio, is in Scottsdale. And so I was at the studio and I was hanging out. That was like kind of what got me my start was reading Rich Dad Poor Dad, and so many other people I think is the same thing. And so then he was just like, be cautious, young man, easy come, easy go. And I was just like, well, you just don't understand. So smart. Like I'm buying things at a discount.
Come on, Robert. I know
Come
more.
on. I was like, he just doesn't get it, man. Old man here. So he was right. I was wrong. I then was lost everything. I'm sitting on a street corner down in Tucson crying.
Wow.
And just broken. And I'm just like, wow. And, and then actually to give you even some more context from that was before the subprime meltdown, I had pretty good credit, had good banking relationships. I'm a millionaire. I have, cash in the bank. And so banks are wanting to woo you. And well, what had happened is as I was winding down the portfolio and then I kind of ran out of money, is they were still honoring my mortgage payments and my bank account actually was negative. And so like my bank account went to now it was negative 5,000, then negative 10,000 and now and so like because they're like, hey, he's a good relationship, good customer, he'll bring it in. So like and now all of a sudden like I needed to make tens of thousands of dollars just to go back to zero.
Wow.
Not only that, I had a negative net worth because all these properties that I still own that I hadn't been able to liquidate were worth less than I owed on them. So I have a negative net worth, I have a negative bank account, and I'm sitting there and I'm just like, dear Lord, can I be worth no money? $0. Like, can I
Yeah.
start over at zero?
Yeah.
That would be awesome because it's better than the negative that I am today. And so those are some of the things that I went through. Trial and error is an amazing and fantastic teacher. It's actually the worst way to learn. It is like the most difficult way to learn is the most effective teacher. So then when I learned some of these things was like, how can I share this out to other people? And that is the example of the catching knives is like, hey, I have a lot of experience in buying these just distressed real estate because even though I was sobbing on the street corner, I realized that the best time to buy real estate is when there's blood in the streets, even if
That's
it's your
right.
own blood.
Even if it's your own blood. Wow. That's where the catching knives comes from.
That's where the catching knives comes in.
So yeah, blood in the streets. Everybody in real estate, blood in the streets, yada yada. You caught this way ahead. You've had a crazy story. Thank you for doing what you're doing now. Now it's about helping people, and people are scared. They're crazy. They don't know what's going on. Maybe some people didn't read your book, right? They're looking for something like this. So let's get into some of the crazy stuff right now. How are you putting people on the path?
Yeah. So one of the things is due diligence is super, super critical. And there's a lot of people that came to me because they knew I did commercial real estate. They knew I did these deals. I'm going to tell you that I have a lot of investors and friends that are like doctors, high net worth or high income earning people that are like, Jake, I'm going to go into be a real estate investor now. And so I was like, cool, that's awesome. So can you give me some advice? Can you help me out? And so as I started having some of these people bring some of their deals or theoretical potential deals to them, some of them I was like, I would not do this deal. I don't like it because of X, Y, and Z. Some of them went through with some of those deals. And now they're coming back and calling me up and they're like, hey, by the way, I just lost $200,000. That I had to put a roof on that building. I had to do this, or the tenant backed out of the lease, or some of these other things. And it was like, and so after in a combination earlier this year, I saw some of these things, the starting of that, the music slowing down, not even necessarily stopping. And I was like, some of these people are going to get in trouble. And that's why I said like due diligence is so, so critical because when you buy something, it becomes very, very difficult to then recorrect course. And so like you make your money on the buy and then you just try to not lose it while you own it and operate it, And so that like right now is the first time in the last several years that people are more willing to sell closer or even at a discount to what the intrinsic price is. And so when I say what the intrinsic price is like, what does it cost to build a building? The sticks and bricks, like it might cost you $200 a square foot to build a building. You could go buy an existing asset for maybe $170 or $150 a square foot. So you're buying it at a discount to what its intrinsic value. Well, in commercial real estate, sometimes that's what cash flow is being generated. And so I say, figuring out and use the time when you're in escrow to come up with all the things that would blow up your deal. And I see so many people that go close on the deal and then discover some of the things that would get them in trouble after they've already purchased it. So I go to, that's where I say is like my best advice to everyone is do a tremendous amount of due diligence while you're in escrow so that you can remove and make sure that the deal is a slam dunk while you're in escrow. Because guess what? You can back out of a deal when you're in escrow. Hey, you backed out of the deal, maybe. And if you actually structure your contract, your LOI, and your PSA in the right way, you can sometimes back out of a deal for only a few $1,000s or a limited amount of money. You may still have the cost of the inspection reports and the flying out there and, those components. But I'm going to guarantee you it's going to be way less than you get 6 months on the other side of it. And you have a tenant backing out, and you have people calling me up and say, I just lost $250,000 because I had to put a new roof on this building. It's like, you should have figured that out ahead of time.
Yeah.
Or the tenant that's not going to renew. And so I go, that's why. And I say, buy it right. And now you can actually get some discounts on some assets right now. And this is the time that you should be buying.
I love everything you're saying. And I'm going to try to be as witty as you. It's kind of like a double-edged sword, because we're buying a distressed asset with a bunch of problems. And then we need to figure out all the problems. It's like you're trying to get married, but you like really got to figure out, who you're marrying, and you might want to run away before you get to the altar. Properties, though, they're still difficult to find, right? The blood in the streets, it's not, I don't know, it's kind of getting here, it's on its way here. And you're all about timing, and you've kind of gotten ahead of this. So when do you think is going to be the right time, or what indicator, what's going to happen to show us?
So that's the other big thing that I talk about in the book is you got to do your homework ahead of time. The people that can move the fastest are the ones that have the most information available to them. And so if you're waiting and trying to time the market, you're going to miss. And that's a fool's errand. I have talked to many, many multi-centimillionaires, billionaires, people, and they're like, don't try to time the market. It's stupid. You can maybe kind of time the tops or the bottoms, and you're kind of rounding it out. So you buy and it still might be going down. It still might be going down. But understanding is like, develop a business plan first and foremost. And so when I ask that, is people like, is it a good time to buy? And go, it's always a good time to buy. It just depends on your business plan. And so if your deal can't, and oftentimes devaluations are theoretical, meaning just like, it was worth $5 million. It went from a particular cap rate down to a different cap rate. The cash flow stayed the same. So it was worth $5 million. Now it's worth $4 million. That doesn't really matter to you. And again, it depends on your investment horizon and your timeline. If this is a forever asset, you're going to own this for the rest of your life, I think it's a great time to buy. If you're going to own it for 10 years or 5 years or maybe 3 years. And so again, you just have to understand your business model and your investment thesis that you're coming into this. And then does that acquisition price warrant the price that you're paying for it to execute your business plan? And then if you're planning to exit out of this in 3 years, or I'm buying it for cash flow and I'm going to do a value add strategy to that. Again, that's like the multi-dimensional aspects of where commercial real estate is like, you can do so many other things. And I learned that by butting up against institutional investors, the Blackstones, Invitation Homes, Tricon, Colony Capital, some of these other groups. They were playing a different game than I was playing. I was flipping an asset and trying to be in and out of it in 6 months, or short term. They were like, hey, we're going to buy everything on the market because we believe the properties are going to reset to their previous peak high. And then they're going to go up even higher from that. And so we're playing a 10-year investment horizon. And so right now we think everything is on a discount. So we're going to buy everything. We don't care what today's value is. We're looking at 10 years value. And so then what happened, because I was like, I don't understand. They just paid, let's use an example, $350,000 for a property that was only worth $300,000 today.
Yeah.
I go, that seems stupid. Like, why would they do that? Well, they're like, it's going to go up and it's going to be worth $700,000 in 10 years.
Right.
They were right. They made billions of dollars. I was micro right about my ability to do a value add strategy. And I saved 25 cents a linear foot on baseboard. So I made an extra $500 on that particular, building. Yeah. They were macro correct and made $8 billion and then securitized it and took it out to an IPO. And I was just like, oh, I'm thinking too small. And so that is very much a lot of the components about how you're buying. is you need to understand the game you're playing. And then oftentimes in distress is you're going to have limited amounts of information. So commercial real estate sometimes only trades hands once a generation. And so then if you're prepared, you are to do your homework. You're doing, reports. You know what market comps are. You know what tenants are looking for space. You start identifying, assembling your team. Like you're going to need an Avengers type team. The other big thing that I have learned is I have done, again, thousands of transactions, 20 plus years. I have a broker's license. I went to grad school and have international real estate and finance degree. And I was like, I feel like I know nothing. And I was like, I hire very, very competent attorneys to do things, to read lease extracts, capital markets groups to sit down and go through those things, because it's so easy to miss so many different things. I do not have to know everything. And that's the other big thing that was freeing in an aha moment. So start assembling your team that you're going to probably need a contractor if you're doing value add components. Who is that contractor? Maybe they become a partner. Maybe there's ways you can start leveraging this for little to no money and get into a deal because you've formed your Avenger core of people that are going to go in and buy these distressed assets or something on that. And then when it fits your criteria, it allows you to move much faster than other people when at $125 a square foot, this is a home run all day because of our business model. And now because you've done your homework ahead of time, when that opportunity presents itself, that once a generation asset that happens every other week, you have the ability to move quickly and efficiently and then create generational wealth in these recessions.
Love everything here. All of this is broken down in the book. Did you have a copy of it you could flash?
I do. Yeah,
Let's see this. Oh, it's beautiful. Hang on, you got to move it a little. There you go. So where can we get the book real quick?
So catchknives.com is my website where you can go to. You can buy the book there. It's through Amazon. We have some other stuff on Catch Knives. We have a newsletter. We start sharing some of this information because the market's changing. And when I wrote that a couple of years ago, it's a little bit different. I actually thought it was going to be in 2020.
Yeah.
The government went and printed, $20 trillion and all real estate values tripled. And I'm just out there and be like, I don't know, man. Don't fight the Fed.
Keep the faith. It's coming. It's coming. No, I love it. Timing is everything. And, I hate the whole fear thing. I love what you're saying because it counteracts that. There's so many, we get emails. It's like, I was looking forward to buying something this year. I'm going to wait until next year. I'm always like, now. We get a bunch of emails. So I'm like, now, response. Boom. You should do it now. I'm not going to give you any other context except now. So with some of the folks that you work with that are still kind of on the edge, or maybe they just started and they're in their due diligence, what's going on with their, are they still doubling down? You think people are going to slow down? Well, for the next few months, what do you think is going to happen?
Right now, I feel like not a lot of anything is happening. Everybody's kind of in, because uncertainty in the Fed, interest rates, inflation numbers, election, all of these things give people pause. And I also think there's a pretty big gap between the buy and sell. Mm-hmm. Sellers aren't willing to come down to the prices that they're getting. And so it'd be like, and I saw something, I was like, is it a lowball offer if it's the only offer you have?
No, it's like a tree falling in the forest.
Yeah. So it was like, you want to sell your building for $5 million, but someone has only offered you $4 million. Is that a lowball offer? And so part of that is, I think there's some sellers that haven't come to the full, the gap and the pricing has come down to where it makes sense. Yeah. And so to me is advice that I give to people. If you're trying to buy a deal now, look at that and underwrite what it potentially could be in 6 or 12 months from now. If you believe the market is moving down, but you have the wherewithal to buy an asset right now and you have the collective and you have capital, just buy it at a discount of what you think it might be. And that could be for your primary residence. That could be for a house that you're looking at. Go offer something that is at a a low enough price that makes sense for you so that you're not trying to time the market. You're buying it on a price point that makes sense for you. And you could do that theoretically today and acquire something. Interest rates, and I'm going to give you another interesting stat that
Please.
maybe it's right, maybe it's wrong. 22 months on average over the last 100 years from when the Fed started raising rates to when they start cutting rates is a 22-month span. And the longest time period was like 30 months. And so what was happened is the Fed historically over the last 100 years overdoes raising rates, brings us into a recession, and then they start cutting rates faster than they raised rates. So again, this is historical over the last 100 years of Feds raising rates, 22 months on average. We're approximately like 11 months into them raising rates to when they theoretically could cut rates. Average it out. Maybe, again, deals that I bought in 2019, I did not underwrite for an epidemic, let alone a pandemic. So there are things that completely disrupt and things that have never happened before now happen. So just because I say 22 months from the average time of when they raise rates to lower rates doesn't necessarily mean that in 12 months from now, interest rates are going to be falling. They could continue to be going up, but I'm just using that as a reference, is that it doesn't stay bad forever. It doesn't stay good forever, that there's cycles to other of these things. And so if you can acquire something at a very big discount, understanding and your deal makes sense on today's interest rates, maybe continues to go up. But if you're looking at 3 years or 4 years or 5 years into the future, when interest rates historically have started to drop back down and been lower, that could be a theory that you come up with that actually could be very, very beneficial for someone that's buying assets today. And then as those interest rates drop, we could also see cap rates expand and the values shoot up, increase as well.
Man, I love it. I love it. That needs to be printed in your next book. How does somebody work with you? You know, everything you're saying is super logical. It's actually a good tie-in from what you were saying earlier. But, you know, do you take on individual people? How do you work with investors?
Yeah, so we do. We have some funds we've done. We've done some individual assets that we go raise on. You know, these are accredited investors. This is a new thing, as putting out the book is now we're starting to put out some courses. And so I've had a few people, I mentioned some doctors that have approached me about, hey, can you help coach me through this? And so it's not necessarily just distress, and really where I've been started focusing and I'm working on, and I don't know that I've put this out there anywhere, but I'm working on a second book. And right now the working title is called Passive Wealth Machine. And it's really to stop trading time for money, is because when you're the owner of real estate, it's active. There's, that's the big disillusionment is like, hey, I'm going to go buy an absolute, triple net deal. You're going to still be active. You're going to be the landlord. You're going to still deal with the pizza place that catches on fire, the pandemic, rent adjustments, the city doing the road construction in front of your strip center for the next year. Like it's an active. And so really what it is if like you're really good at making money, you're making $1 million a year as a doctor or lawyer or engineer or, whatever it is. Like, I was like, you should do more of that because that's really hard. And you've probably developed some kind of moat. And I was like, you need to start using those skill sets to invest passively into these other deals. Invest with people, if it's like you or others that have syndications or doing other deals. And maybe you've talked about this previously, but it's like the investors make the lion's share of the returns.
Mm-hmm.
The sponsors, the operators make a small amount. And if it performs really well, they can make bigger chunks and higher, returns based on the dollar amounts they put in, but they're doing the sweat equity kind of component to get those higher levels. But the investors make the most money of that on almost every deal I've seen. So it's like, you need to stop trading time for money and start trading money for more time. Mm-hmm. And then when you can start leveraging using your money to buy up and free your time, it allows you to actually lean into what is your purpose in life. And so I've mapped this out is like, there's Maslow's hierarchy of needs. And when you go to this, it's like, it's at first it's just survival. Now I can get better food, and now it's like, now I need, a Mercedes, it's the C class. Now I need the S class.
Yeah.
I need it from the S class. Now I need a G Wagon. Now
Right.
from the G Wagon, my house, it needs to go from this to that.
Yeah.
And what all that is just, and then you get to a point of like self actualization where you're like, I don't actually care about other people's game. I don't actually care what other people think. They never really liked me anyway in the first place. So, and that oftentimes leads to success. And so you have levels of success where you made a bunch of money. But what happens, and you've seen this, and we're kind of diverging off of this, but it was like a lot of people are chasing money because they think it's going to buy them happiness and fulfillment. And so as I've seen more and more people that start working up in their levels of success, they get to kind of a plateau where they're feeling unfulfilled because they're like, I thought that S series, that G Wagon, that bigger house was going to make me
Happy.
feel better.
Yeah.
And they don't.
Mhm.
And then they're just then that's what oftentimes this existential kind of midlife crisis, they've been chasing this hedonic treadmill for so long. And so then what I'm talking about is you need, and illustration is, so that's a triangle, Maslow's kind of hierarchy of needs. What happens is once you get to that level of self-actualization is like, I believe that God gave everyone a special gift and a talents that you have that are just naturally something that you do better than other people. And so you, and using your talents, your purpose, and then using it in service of other people unlocks unlimited amounts of happiness. And so what happens is it stops becoming trading your time for money and actually using your time to dive into your purpose. And when you start using your purpose to serve other people, you actually have unlimited amounts of happiness. You never needed the money to begin with. You got on that rat race, you got on that hedonic treadmill because that's the way, the American way, or maybe society as a whole. But you look at like people like Mother Teresa, you look at people that are like monks. They didn't need any money, but they were using their purpose to serve other people, and they were very, very fulfilled. And so I see that is happening over and over and over again. And that's why I think that you need to develop your passive wealth machine so that you can invest into these deals. So it starts giving you the ability to expand what is your time that's available. We're really good at distracting ourselves with more things and more tasks and other things, and then trading one job for another job. I'm making $500 an hour as a doctor. Now I'm a real estate investor and making $50 an hour. Now I'm going to do an Amazon drop ship, thing. And now I'm going to do this. And it's FOMO. And that was like the biggest thing that I see happening over and over and over again. And so that's why I say this is like go from FOMO to MOFO. Develop a modern family office that allows you, because if it all depends on you, it dies when you die.
Mm-hmm.
Your investment, your things, your purpose dies when you die. Do you want to hand this off to your kids? Do you want to do something that's beyond and creating your legacy? Well, guess what? It has to do with you living into your purpose, giving other people the permission to live into their purpose. And then you can really start creating a legacy that lives beyond you, lives multiple generations in the future. And I'm going to say money does matter in some of those aspects. It's fake. From the theoretical, the government just printed it and we have a faith in a system, but it is also the fuel that will allow you to unleash your purpose in serving other people into the world.
I love everything you just said. And I'll add one thing, man. People don't say it, but real estate, like we are putting roofs over people's heads. We are paying for their heat sometimes. The taxes are going to the schools, those roads. Like it's a beautiful industry, especially with everything you just said. Hey, Jake, I hate it. I got to call time. But everybody, check out the show notes, catchknives.com. Jake, thank you for being here.
Hey, thanks for having me. It's always my pleasure to talk about real estate and other things like that. You put a quarter in me and I will dance like a monkey as far
You're
as
awesome.
talk all day long.
No, it's wonderful. Really, all the success in the world. And I think the book is very apt and it's needed right now. And I have so many listeners that are like always on the fence. It's been like from 50 shows ago, they're on the fence. So if you are, check out this book, have some fun, and get a hold of Jake. Jake, thanks again, brother.
Awesome. Cheers.
Cheers.